You're welcome back. Now let's look at the next requirement of this question, which is to prepare a partner capital account. Okay, so we have the capital account of the partners in a columnar form for A, C, and a new partner B. From the question, their respective capital account at the beginning of the year was A was 60,000 and C was 30,000. Let's transfer these to the capital account. Okay, so that will be the balance brought forward. A will be 60,000 and C will be 30,000. We were told that B introduced a capital of 25,000. Okay, and I told you that from the journal entry that you would debit the cash or bank account and you credit B's capital account. So let's credit the capital account with the cash B brought into the partnership. So under the partner's capital account, we will have cash. Okay. Under B, it will be 25,000. Okay. Having determined their respective capital, therefore as it is now, A has 60, C has 30, and B has 25,000. What will increase their capital is two things. One is their share of profit, and two is the share of goodwill. Okay, so let's recognize those. The share of profit on revaluation for A from the revaluation account is 780, and for C is 520. So let's transfer it. Share of profit on revaluation, A is 780 and C is 520. Alright. The next is the share of goodwill. Remember, we said you initially share goodwill in the old profit sharing ratio by debiting the goodwill account and crediting the capital account. We have debited the goodwill account with A 7,200, C 4,800. So let's credit the capital account. Okay, share of goodwill. A takes 7,200 and C 4,800. Okay, now on admission of a partner or on retirement of a partner, these are the basic items you will find on the credit side of the capital account. Basic items. They will always occur. Or probably the goodwill will not be there, or the revaluation might not be there. But this is the highest item you will see there most often than not, except if the examiner wants to introduce some additional items. Okay, now, having recognized the capital, the new capital introduced, the share of profit on revaluation, and the share of goodwill, let's remove the goodwill. We said that the goodwill will be removed by crediting the goodwill account and debiting the capital account. A, we removed 6,000, C, we removed 4,000, and B, we removed 2,000 from his capital, being what he is bringing for his own share of goodwill. And of course, he will be giving it to A and C, who are the old partners. So let's have it there. Share of goodwill. A is 6,000. C is 4,000 and B is 2,000. Okay, I've explained the credit goodwill and debit goodwill. I've explained it to you from the previous video on goodwill. Now let's balance this account. The total for A was 67,980 on the credit, while on the debit it was 6,000. Obviously, the deficit is on the debit, so we have balance carried forward, and that will be 61,980. So the total on the debit also is 67,980. For C, the total on the credit gives 35,320, while on the debit is 4,000. So the balance there will be 31,320, which brings the total on the debit also to be 35,320. For B, the total is 25,000, and the total on the debit is 2,000. Therefore, the balance is 23,000. Okay, that brings the total on the debit also to 25,000. So the balance brought forward on the credit side will be 61,980 for A, 31,320 for C, and 23,000 for B. You will see that though B brought in 25,000, but what he is having as at now is 23,000. Why? Because he has paid 2,000 as his own share of goodwill, paying 1,200 to A and 800 to C. Thank you very much. See you in the next video.